better. So that takes us to our next thing, to grow more money. We want to grow more money? How are we doing, conference? All right. Let's talk about growing our money. Okay, the number one question you ask me, the number one question I get asked in my career by all my friends, family, colleagues, and of course clients, the number one question I get asked is, what should I do with my money? I have some extra money, it's sitting around. You're a top wealth manager, certainly you know, what should I do with my money? I'm going to tell you, okay? As I look at them in their eager eyes, waiting for my answer, just as I'm looking at you, some of you with your pen pressed to paper, and you kind of already feel the disappointment mounting. You kind of already feel, I'm going to say the thing, you're just, please don't say it, it depends. Oh, come on, man. You're going to make me work? All right, well, let's just talk about what your options are. Okay, let's just talk about what your options are. Okay, one, I could just leave it in the bank. Okay, of course, I do nothing, so that doesn't require any action, so that's easy. I'm also considering, should I pay down some of my debt? Right? This is something that I get asked a lot. Should I pay down my debt or should I invest it? So let's start there. Those are your three first options that you're needing to look at, and we're going to help make a decision for you right now what to do with your money. Okay? So our first instinct is what? Don't do anything. Don't do anything. Why? One, I might make a bad decision. Okay? So if I just sit back and do nothing, I feel a little bit better that I'm not going to make the wrong choice. I'm just going to make no choice. Okay? The other thing is, well, what if I need it? Kind of hoard my cash. I like to see it. I want to see it in my bank. What if I need it? You know, I worked hard for this money to keep this money. I need to just see that it's there. What if I lose it in some investment? You know? So let's first talk about leaving it in the bank versus paying down your debt. Now, very, very important. Understanding debt is key to building wealth and having financial freedom and financial success, right? It just should be a whole semester in high school that we learn about this different things, okay? You guys? So I'm going to teach you, you teach your kids, okay? Here we go. So there's two types of debt that are really critical to understand. There's revolving debt versus installment debt. Okay, and we have to differentiate those two and treat them differently. Installment debt is when I borrowed money, like to buy a home or to buy a car or to go to school, and I'm guaranteed going to pay back the bank or lender over time at a fixed payment schedule at some interest rate. Okay, that's called installment debt. I'm going to pay that back over time. Revolving debt are my credit cards or home equity lines of credit. I can borrow money, I can pay them back. I can borrow money, I can pay them back. Okay? And when it comes to credit cards, those are usually going to have the highest interest rates. I can feel free to pay down my revolving debt. Because what if I need it? Well, that's what the credit card's for. You know, what if the emergencies happen? So for an emergency fund, if you had a credit card, $8,000, $5,000, $10,000 credit card you didn't use, look, the reality is emergencies usually don't happen. They usually don't happen. But if you did get hit with those hospital bills or that deductible if somebody rear-ended your car, right? Or you rear-ended somebody's car, okay? Your credit card could be there for you in that moment if that ever happens, and it usually doesn't, okay? So the other thing is I have to look at the interest rates on my debt. So you should be able to do this. Again, Truebill will do this for you. And you'll be able to look at how much you owe on each different type of debt and make very wise, good decisions about what you're going to do with the money that you have in the bank. Whether you have it now or whether it's coming next month, you already want to know what you're going to do with it. So you don't ask me this question. You already have the plan when that money comes in next month, next year. Okay, so what is the rate of return on paying down debt? I can leave it in the bank and earn nothing. I can invest it in the stock market, which is volatile, right? Over time makes about 10, 11% a year over time, but it could be up and down. Or I can guarantee myself a rate of return which is just equal to whatever the interest rate is. So if you owe money on credit cards, interest rates are high or low? High. 15, 20, 25%. So if I had $1,000 I owe to my credit card, and I could just take $1,000 out of my bank and pay down that credit card, right? I am guaranteeing a return of 20%. Guaranteed return of 20%. If your bank offered you a savings account that guaranteed you 20% rate of return, how much money would you be trying to stuff into that account? That would be a pretty easy decision, and I'd be out of a job, right? Don't need it. Guaranteed 20% return. If you own money on credit cards, you got it. Imagine having to pay that and how wealth destructive that could be versus paying that off, right? So I really counsel us. Again, Truebill shows us this thing called net cash, which is really helpful for me to make these decisions. And mentally, I can look at it and say, I have this money, I can use my cash to pay down my debt. And then I notice that once I do that, my net cash doesn't really change. Okay, your net cash. And this could be a negative number. You might owe more on credit cards than you have in the bank. That's fine. Okay, just being aware of this and what to do with that money to chip it away over time, not growing that credit card balance over time is going to really help. So do I leave it in the bank? Okay. What if I need it? Revolving debt, because if I need it, I can go get it. And I'm guaranteeing myself a pretty high interest rate if I own any money on credit cards. So that's why that is our number one goal, okay, is to managing that credit card balance. Then I could get to this time frame when I can choose now to invest it. I can look at investing my portfolio in the stock market, in the bond market, a mixed stock and bond portfolio, or investing in real estate. Okay, how many people have a goal to buy more real estate? Let me hear you. So real estate is a phenomenal investment that builds tremendous wealth over time, much like the stock market, okay? And if you don't own a home, it should be your primary goal to become a homeowner, all right? And I'm sure many of you who don't own a home, it already is. Many of you own a home, probably want another one or an investment property, okay? To invest in real estate, you have to do everything that I've told you up to this point. Everything that I have said to do up to this point is going to help you buy real estate. You are not going to buy more real estate owing money on your credit cards. You're not going to buy more real estate if you don't earn more and keep more. Manage your taxes. Max fund IRAs and Roth IRA contributions. Build stock portfolios. Okay? All of those things help you accrue more money, earn more money, keep more money, grow more money, so that now you have this future nest egg that you can what? Then leverage it to buy that real estate. Okay, so you have to do everything that I've just said up to this point is going to help you with that goal to buy that real estate. Okay, if I look at these things over time of how to make money, okay, I can look at over the last 25 years, if I put $100,000 in the bank, okay, and it just sat there, or I invested in CDs, over 25 years, I'd barely break even. With inflation, I'm losing money. If I put that money in the stock market, $100,000 investment in the stock market 25 years ago would be worth $867,000 today. Okay, one investment. If you said the stock market is too risky, I want to take a balanced approach. I want some stocks, bonds, 60-40 mix of the two. Okay, it's a balanced approach. It's going to be a lot smoother. I'm not going to go down so much in like great recessions and all of this, smoother line, but it's still worth $635,000 today after 25 years, right? And real estate has gone up. It's about tripled in value over the last 25 years. So you'd have about $100,000 property would be worth about $327,000 on average, nationally. So why do people say they make so much money in real estate? Right? That doesn't look like it's much better than investing in balanced stocks and bonds. That looks way better. Well, if you had $100,000 25 years ago, you're not going to go buy $100,000 of real estate. What do people do? I'm sure you might know. What do people do when they buy real estate? Why do you have a job? What do people do when they buy real estate? They get a mortgage. And they don't buy $100,000 of real estate. They buy $300,000 of real estate. And they leverage that. And now, if you triple $300,000, guess what that's worth? $900,000. So that's why investing in stocks, investing in real estate are tremendous wealth creation things. And that real estate could provide you income, it could do all kinds of things, tax benefits. It's a job. Investing in the stock market, it's easy. You just put your money there and kind of walk away. But there's tremendous opportunities in both of these things. Okay, one of the number one things I hear too when I come and talk to this group is I need to know what to do. What's my first step? Okay, so far we're looking at Truebill, okay, to manage our finances, take that first step to look at our debt. If we're ready to invest, people say, where should I open my account? Which one should I do? Okay, it doesn't matter, all right? I don't care if your money's at Schwab, E-Trade, Fidelity, Vanguard. I was talking to my barber last week, and he said he likes investing in real estate, but he really wanted to invest in the stock market. I said, well, do you have a brokerage account? He said, no, I don't. He's kind of embarrassed. I only have a Robinhood account. I'm like, yes, go for it, man. You could be investing right now. You know, he's like, I only bought Dogecoin on it. I'm like, okay, well, it's true. So look, I see people with multi-millions of dollars that have accrued their wealth in Charles Schwab, E-Trade, Fidelity, Vanguard, and wherever else. They're all the same. It's pretty much free, okay? So investing in the stock market is essentially free today, and all of these can easy to open account. They have apps that go to your phone, allow you to invest with no commissions or trade costs. It's a democratized stock market these days. You have easy access and zero to little cost. Okay? If you want help managing a portfolio, okay, there are other services out there like robo-advisors like Betterment. Okay, anybody hear of Betterment? Yeah? Couple? Okay, we actually partner with Betterment. I love their services. And you can go to betterment.com, you can check it out. There's zero account minimums. If you have $10, $100, $1 million, you can have easy, optimized, personalized portfolios that are managed for you. It's incredible, okay? You get this dashboard where you can actually connect any outside accounts that you have out of Betterment, just like you do in Truebill. It'll feed all in here and start tracking your net worth and showing you your net worth over time. And we want to watch that grow. Okay, track your savings, view your performance, move money, okay? Look at your earnings on what you've earned, manage your deposits. So like those goals I was just talking about, okay, this individual is right on track. Then May 15th, they put $500 towards their Build Wealth portfolio. That's one of their goals, to build wealth. They're doing $500 a month, however many loan signings. Safety net. I want to build my emergency fund. I'm going to automatically have $300 go to that, and $300 go to my dream home fund. You make those goals. You personalize those goals. It helps you stay on track of achieving them. And the portfolio construction that you do is akin to what we do in our wealth management firm for very wealthy people. Okay, they'll take and help you identify your time horizon, because that's the number one ingredient. How long do you have to invest? We know the longer time we have, the more risk we take, the more opportunity we have for us. Set these goals. Goal setting is so important, not only to help you keep and grow wealth, but it actually helps you earn more money to go get that one more loan signing so that you can max out that Roth IRA. Determines your risk assessment, right? You don't have to watch your money be so volatile. If that's going to freak you out, make you panic and sell, then you can have a smoother ride, have a more balanced approach that delivers asset allocation. This is advanced stuff that we do for people. Okay, at our firm, building a core portfolio of exchange-traded funds, investing in hundreds of companies, stocks, bonds globally in your portfolio. Okay, and they also allow you to even do core satellite investing. Core satellite is a very advanced concept that we do. Okay, that is now democratized. What is a satellite? So you have your core. You have your core investments that you want to invest in to help grow, but you can also say, I want 20% of my money to be invested in just innovative technology companies. Or I really care, is my money doing some good on this planet? I think that the world that we're building for the future is going to reward companies that make a broad impact, a climate impact, a social impact. Or I want some of my investments to change in direction in certain markets, become a little bit more cautious when times are tough, be a little more aggressive when the wind's at our back. Okay? And you can build these core portfolios. It is really, really amazing. Here's the cost, okay? If you're worried about it or what's the next step, very easy to do online, okay? There's zero minimum. It's 0.25% that they charge you to do all of this. And so for every $100,000, you're paying $250 a year. That's it. To do everything that I just said is for every $100,000, and there's no minimum, so you can have $1,000 in there, you still get everything that I just said. Okay, that's the cost. If you have other things going on, once you've built your account to $100,000 or grouped all of your accounts over 100 grand, you might need some higher end advice on what to do with what's going on in your finances. And they, for a premium of now 40 basis points, so an extra $150, you could have access to their team of certified financial planners. Work with graduates that are CFP professionals that can help answer any of your questions. And they can answer almost all of your questions, okay? If you grow your account larger, you need more advice, you can partner with firms like mine that are Betterment advisors, right? Our costs are higher, our minimums are higher, the services are higher, but not until you get there do you need them. All of this stuff that I just said that they do is very inexpensive and accessible, okay? So if we're gonna close, right, what's the worst thing that you can do right now with your investments? All right? Don't wanna panic. We're not cashing out, okay? What's the best thing that we can do? What's the best thing you can do when the market goes down? Right? We wanna buy more, okay? Remember, history tells us these hard times reward hard work, okay? Hard times are gonna help better businesses succeed, okay? So let us please earn more, keep more, grow more money. Are we going to take a couple things that we learned here in this presentation and put them into action? All right, it's time for an EKG. Everybody, thank you. It's so nice to be here on conference today. Enjoy the rest of your conference 2022.
Oh, man. My man. Oh, fire per the usual. Thank you so much. And that's a wrap. Can we give it up for my man, Dustin, please?
I got one more offer. I just want to say.
Why is everyone getting up, by the way?
Just one more.
Okay.
For my ballers in the room that are hitting it during these times and are stepping up for the charity that I love and support, that Mark loves and support, that you're going to hear about more from in a minute. Okay, so for the top 3 donors, okay, I'm going to offer to build a personalized wealth management plan for you. Okay. As well as keep you on track for the next year. Okay, so not only will I build that personalized wealth management plan for you today, I will schedule out the next year of reviews to make sure that you are on track. So when we come back to conference, we have re-strategized, we have built your plan, we've gotten you to the right position, achieving your financial independence. Okay, so for our top 3 donors, that's what we're going to do today.
So he's going to build a wealth strategy. By the way, he only deals with people who make millions of dollars. So your opportunity. So if you're going to make a donation, go back to the Promise the Kids booth. Largest donation, top 3, he will build it out. So thank you.
But remember, whatever donation that you give them, it's a tax write-off.
Let's go. Love you, buddy. Thank you, man.